Greetings and welcome to the Theta Gold Mines Conference. It is now my pleasure to introduce your host, Chairman Bill Guy. Thank you, Mr. Guy. You may begin.
Thank you. I'd just like to welcome everyone here today to Theta Gold Mines presentation. As we go through the story today, I just want everyone to remember a couple of key things. This is a growth story, a near-term production story, and a multi-million ounce story. So, South Africa is an amazing place for gold, and I think you guys will enjoy the presentation today. So on the front of the presentation, we have the mine site. It's an active mine site. There's about 30 people working there today. There's also drilling and exploration going on today as well. Technical glitch. Okay. So there's the disclaimer for everyone to read at their leisure. So South Africa is the home of gold. It's produced over 40% of the world's gold. It's an amazing place geologically, some of the best geology in the world. It's produced over 2 billion ounces. So that's just this little northeast corner of South Africa. We can see here in the purple the Bushveld complex. The Bushveld complex is the largest laid igneous intrusion on Earth. It's also the richest mineralogenic province on Earth. So it hosts about 80% of the world's platinum. It contains vanadium, iron ore, anything you can imagine really. It's a very mineral-rich country here. Over on the eastern side, on the western side here, we can see our goldfield in red and yellow. There's about 43 historical mine sites under management here. South Africa is a very active mining district. It produced about $23 billion worth of mineral wealth in 2018. So anything you can imagine for mining and development is available in Joburg. Little technical issue here. There we go. So we control a very large gold field. There's over 6 million ounces under management at the moment. 1.3 million ounces available as open pit material. 4.5 million ounces available as underground material. We can see the good grades, 3 grams for the open pit, over 5 grams for the underground material. There's an ore reserve at 2.7 grams, so very high for open pit material. We control the Eastern Goldfield, Eastern Transvaal Goldfield. That we own that virtually totally to ourselves. There's been very limited exploration there since World War II. So basically, World War II came along, and that was pretty much the end of most of the mining in the field. There's historically been produced 6.7 million ounces since 1870s. This was the first gold rush in South Africa. So it's a very old field, but it's always been mined by underground. There's never been any open pit mining. We own 74% of this project with 43 historical mine sites under management. So, and we sort of feel there's a lot more to come here as we bring on modern exploration and regional magnetic surveys, etc. We think we'll delineate more gold going forward. Sorry. So here's just the board of management. This board of management's built 16 mines. Me and Tim Benkin used to work together at Jupiter Mines. I was there about 5 years. We worked under Brian Gilbertson, the former chairman of BHP Billiton. During that process, I delivered the Central Yilgarn Iron Project, and Tim Benkin built the Chippy Project in South Africa. The Chippy Project's the 3rd largest manganese mine in the world. So when Thing got there was just a flat piece of earth, and he took that from 0 to 500 employees with rail, silage and plant development. Rob's built about 8 projects around the world, mainly in Southeast Asia. He built Sepon, Chattree. There's Richie Yang, our finance director. Richie recently sold one of his ASX listed companies for 40 million. We've got Brett and Simon, our non-executive fund managers. There's 454 million shares on issue. There's 33 million options at 30 cents, expiring October. The market capitalization of the company is about 118 million or 83 million US. And the stock's very tight. It's the top 10 own 71% of the shares, with directors and management owning 10%. You can see the share graph there on the bottom. There's been a nice steady climb with the share price. So really here we're going to talk about the strategy. So the idea is to bring 4 mines into production over the next 5 years to tap into the first 2.75 million ounces. So we'll start at stage 1, the Theta open pit study. That feasibility is already completed, and we'll be bringing that in online about Christmas 2021. Then we'll move into phase 2, which is the extension of those ore bodies into a different mining lease, MR 341. Then we'll be going underground at Reitfontein, 800,000 ounces there available to tap into for the company. And then we'll be moving into stage 4, which is the Beta underground project right next door to the plant, 1.1 million ounces at 6 grams. So the steady pipeline of growth here. My slides are a little slow. So on this map, we just wanted to give you a sense of geometry and the scale and the size of the leases. So there's 62,000 hectares available for us under management at the moment. We can see the central area, which is the Theta project, and we have Reitfontein down in the southern area. This area is called the Sabi Goldfield, and we call this the central northern area up top. So really there's 6.5 years available for phase 1. When we move into phase 2 and we convert those inferred resources to a mining reserve, we'll double the mine life of the open pit material. We'll move down into phase 3, which is the guys have been working on that recently. And we've got the Beta project is just back next door to the central plant area. But what we're not mentioning today is projects like Valhook up in the very north. You see all these little dots on the map, and you've got to think to yourself, well, what do these actually mean? Valhook is over 3.5 k's long. Quite a lot of mineral reserves there available for us. We come down to the south, we can see Frankfurt, another little dot on the map. That was mined back in 2000s by a company called Simmer & Jack. We head further back down south, we come to Clues, Duke, Morganson, CDM. That's not in the current mine schedule at all. It's into the future. You know, when we come down south in the Sabi area, we've got a thing called Glens Leidenberg. Glens Leidenberg has actually produced 34 tons of gold. It's the largest, historically the largest mine we have on our book, and it's sitting there about 1.6 million ounces. So Glens Leidenberg is another project we'll also tap into the future once we get through phases 1 to 4. So this is going to be a very long-lived gold field. So what we wanted to do with the feasibility study, so we went to South Africa to prove that modern Australian ideas and concept about open pit mining could work, and that our exploration techniques would add value to South Africa. So then we needed to prove to the shareholders that, you know, this is going to make money for them. So we completed our feasibility study. So we started off at 600,000 tonnes per annum for 6.5 years for the first open pit. That'll put about 234,000 ounces into the mine schedule. We've already purchased and delivered a 1.2 million tonne per annum ball mill. So this plant will be designed for growth and to be able to double and easily expand. So we know with some relatively modest modifications that the plant production profile can be doubled later on. The very attractive thing about this project is a low capex, high margin project, and in the current gold price, a very exciting project as we move through each of the 4 stages. So what we're going to talk about now are just the economics of phase 1, which are in the feasibility study, MR83. We can see we've got a great internal rate of return of 157%. We can see the ounces in the mine schedule at 259. We recovered 234,000 ounces, so there's over a 91% recovery here. We've got a short payback period of 6 months. Got a very low peak funding requirement of $25 million, and when you think about other projects around the world, you can see how cheap that is, and we'll explain why it's so cheap shortly. We've got all-in sustaining costs of $822, a return on investment of $476, and an EBITDA $181 USD. So as an investor, you always want to think about your cash and where the money's coming from. So when we look at the gold price, effectively, every $100 US on the gold price here adds $30 million to the EBITDA. So, depending on where you sit on the gold price, the gold price is nearly over $1,900 today. So we can see these numbers have got a lot of fat in them to go. There's a long way to go for these numbers already, and these numbers are very conservative at today's gold price. On this one is just the graph of the mining schedule. You can see here we put all the high-grade material in up front. That allows us to get this very short payback period of only 6 to 9 months. We also, during that first 2 years, the gold going in the plant will be over 2.5 grams. For an open pit, that's sort of an amazing grade these days. But there's also, at the bottom of the curve, you see that flat little area there. There's only a 9-month build phase. Because we're just knocking down the old plant and putting new steel on top, all the other infrastructure is there. So we have a very quick build phase. And then we come over to the right-hand side of the capex numbers. We can see most of the capex, as you would expect, goes in the front. But there's very little sustaining capex required. This is a highly profitable mine, and very little extra capital is required to maintain it. We've got a total capex of $31.4 million, using the current exchange rate of 16 rands. So that all looks very good. So what we just wanted to talk about here is give you some idea of 3D visualization is stages 1, 2, and 4. So if we look at the right-hand picture on top, we can see MR83, which is the phase 1. You can also see those little green lines there. They're actually the projection of surface of the Beta underground. We come over to the plant area, which sits in the middle of Theta and Theta. So as we go up the hill, we come to Browns Hill, and then we come up to the Theta project. We can see here there's a boundary, MR341, which will be phase 2. There's over 500,000 ounces available in the phase 2 component to convert into a mining reserve, and the guys will be bringing that on stream as we start building phase 1. We can look down here on the bottom image, and you'll see 2 different colors. You see the blue color, which is inferred, and the green color, which is indicated. So most of this project's been already fully drilled out. We can see Beta is our underground project on a large reef plane, and that reef plane effectively projects the surface. So when we look at the top image on the left-hand corner, we can see there's over 6 kilometers of reef plane here on this system, and really all that happens is from about 400 meters down here is that reef plane projects the surface and cuts through the different hills and topography, but it's actually the same reef plane. So we can see that Theta, Beta all have a relationship. It's a very large sedimentary gold system, and these reef planes occur over and over in the geology. There's actually 21 reef planes identified here from historical data. This is Reitfontein. Reitfontein is the 3rd project in the phases. Reitfontein is a very shallow mine. We can see here on the right-hand side picture, you just drive in. The boys have been working in that recently, taking samples, etc. There's 2.8 million here available at 8 grams. So over 31% of that is indicated of that 800,000 ounces. It's about 40 k's from the existing plant. The ore body is open at depth, and it's open to the south. So we can see there's a lot of potential at Reitfontein. We know the old timers worked at the first 3.5 k's. We can see here in the model where it's been deleted for the historical extraction of ore. It's a very simple vein system. It's very similar to the veins we get in Western Australia. It's just a vertical ore body. Very simple to drill and mine. What we're really just trying to show here is that we have a pipeline of projects that we can tap into, so the company will continue to grow and grow and grow. So even though we're going to be talking about phases 1, 2, and 3, and 4 today, as we looked at when we talked about map, we could see there's a lot of projects we didn't talk about. We've got additional open pit material available at Bellhawk. We've got Glynns, which will be later on, which will be our largest underground project at the end of the day. That reef plant actually extends all the way back towards Reitfontein. It's a great exploration target there for the guys for open pit and underground. But, you know, we just wanted to delineate the first 4 or 5 years in this presentation. So now we've got the gold out of the ground, and, you know, South African people are going to wonder who you're going to sell to. Graham Refinery is the largest refinery on the African continent. I think it's one of the oldest. There's strong relationships with London, the banking institutes, as part of the Bullion Market Association. It's never failed to deliver gold. It does all the refinery for the large majors in South Africa, Harmony, Sibanye, etc., Ashanti, Anglo Gold. So what happens is you put your doré bars in the back of the helicopter. 2 hours later, they'll arrive at the Rand's refinery, and within 24 hours, we're paid in US dollars. So there's no issues with currency. You can pick what currency you want to be paid in and where you want to be paid. So on this page, we just wanted to give people a sense of the corporate structure. So we have the top go here, Theta Gold Mines, listed in Australia on OTCQB in the US. Effectively, all the money is loaned to Theta Gold Mines South Africa and then distributed from there. Transvaal Gold Mining Estate was the first gold mining company incorporated in South Africa ever. So it's a very old historic company. 26% goes to our BE partners. So it's a very fair system. Everything goes in as a loan and has to be paid back to us. So when we look at the Theta Starter-Pit project, the economic interest to the company is nearly 100% for the first 4 years. Some of the money is distributed to the employees through a trust. Some of the money goes to the local landowners and some goes to the local entrepreneurs. So it's a very fair and equitable system in South Africa. These are just the JORC tables, very similar to what you have in the US with the NQ43-101, very similar to the Canadian system. Those systems, JORC and the Canadian system, are interchangeable, effectively very similar in nature. So we can see the 6 million ounces here. This is a summary of the whole project, of the whole resources under management on this page. Read them at your leisure. This one is a summary of the Theta project, open pit project. So there's 879,000 ounces available for us to tap into there for that first phase of that Theta open pit project. And you've got your ore reserves on the next page, 2.7 grams. So it's a very high grade open pit project. Often when you're dealing with sort of someone new, and we are relatively new to the US market, but our history is chasing, for the last 3 years has been very strong. So what we just wanted to show on this page is really who we are, that we're very systematic, experienced management, and we go about our business in a very strong way. So I joined about the beginning of 2018. We started our drill programs. We had great success with the drill program. We were able to upgrade our resources. Then we moved into a positive scoping study. The idea of the scoping study was just to make sure that we were spending the shareholders' money the correct way and that all this gold we were finding would be profitable. So then we did further drilling and development work and metallurgy. We moved up to a feasibility phase. So in May, we released our feasibility stage in 2019. Actually, the share price responded very well to that, as the market could see that this was a very real and serious project. The work has continued on. We bought a mill. That mill is capable of 1.2 million tonnes a year, so we have that capacity to expand the project. Also, we saved about $4.5 million by buying that mill. It was just an opportunity too good to ignore. We brought in some experts from Australia, CSA. CSA is the top 6 firm in Australia, really exploration specialists, and what they were able to do for us was actually further refine the mineralization and the mineral systems so we can explore on into the future and add more gold ounces into this project. We've recently announced our preferred mining contractor. So Digman has spent many months looking at the feasibility study. Their engineers have been in the data, assessing everything, costing everything, and their costs align with our costs. So that was great news for us. Digman will be a very strong partner for us in South Africa. Built all sorts of things and currently contract mines and 4 mines in Southern Africa. Currently, we've got 2 drill rigs on site doing a geotechnical drill out program. That program's ongoing at the moment. But that will also add to the feasibility study, making sure the engineering issues of the project are addressed in great detail. So as always, we're always moving forward and building on our pathway to production. On this page, we just wanted to give the shareholders a sense of future value and what we're sort of looking at. So we have Midas and Cardinal here. So they're all listed in North America one way or another. They have a similar size resources to us. Midas has 4 million ounces. Cardinal has 4.2 million ounces. Effectively, but they both have very large capexes. So compared to our project has a very small capex. So that's where we really feel we have an advantage over some of these other North American players. But really, when we look at the big successes on the New York Exchange at the moment, it's really been DRD has been a great success over there. Market capitalization of 1.45 billion. DRD is a surface miner in South Africa. We're a surface miner in South Africa and has 2 operating centres, sort of similar to what we're talking about. And currently it's got a production guidance of 185,000 ounces per annum. And effectively, we're targeting 160,000 ounces per annum. So we see DRD as a great model for us to work on towards the future. So why invest in Theta? What will happen over the next 2 quarters? We'll de-risk the project. We'll be completing the tender process for the plant build. So there's 5 tenders in that box now, looking at DRA, Lycopodium, Consulmet, all looking at this project to potentially tender for this project. We'll finish the amendment process from MR83 from underground to open pit. So we'll expect the permitting Q4. We'll complete the project finance. We'll be doing some trial mining. We'll be looking at some initial plant construction and increasing the mining reserve. So good news flow over the next 2 quarters. So then you've got to ask yourself, well, why Theta as opposed to another company? To me, what makes Theta special is these discovery costs. So we got a US discovery cost of less than $12 an ounce. We got all-in sustaining costs of less than half the gold price, and it's a multi-million ounce project that really has experienced very limited modern exploration even to this day. And then you've got to, well, what's the asset actually worth today? So when we talk about those discovery costs and replacement costs, when you look around the world today, you know, people talking around sort of $40, $45 for discovery costs. If you look at around the Pacific Rim, they talk about $80 for discovery costs. So you know, $45 of discovery costs times 6 million ounces. It comes up with a very large number there. We got the replacement cost of 150 years of infrastructure. So when you think about this project, it's already got a permanent plant, it's got a permanent tailings dam, it's got power, water, it has roads, buildings, sheds, everything you can imagine, some houses left back from the old days. So essentially there's millions and millions of dollars of infrastructure being left over from 150 years of mining, and that's why our capex numbers are so low. All we have to do is build a plant. Nearly everything else is there and already done and exists. So when I think about it during a gold bull run, I think, well, what's it worth? What's it worth owning your own gold field during a gold bull run? And that's a question the market will have to answer into the future. So I'd just like to thank everyone for listening today to Theta's story. And I think we'll be taking some questions now after this. Thank you very much. Thanks for listening. Okay. Hello. Just hello. Okay. So someone's asked the question, what is the main inflection point for the company moving forward? I really think there's a couple of key things that will be delivered over the next 2 quarters. One is that project financing and one is the permitting. At that point, really from a market perspective, the Theta open pit project's effectively de-risked. And some of those key milestones will have been met. Really post that, we really want to get into late next year, the year before, drilling out the more reserves to add value to the shareholders. And also we'll be looking at, each year is increasing that production profile. One of the advantages of having that large mill is that the plant will have the capability up to 1.2 million tons. So it'll be readily expandable to increase the production profile. Yeah. So we will make the presentation available on the website. Question here. Effectively, that present will probably be a few days. But what we probably ask is everyone just keeps a little bit of eye on it. We will get Mike, our investment guy in America, to resend out all the presentations to everyone and make them available to everyone. We hope that you get enough out of it. It is a complex story, unfortunately, because you're dealing with the whole gold field. So usually, in the mining industry, you're talking about 1 mine or 2 mines or 3 mines. But when you've got 43 mines under management, it's very hard to make the story simple, just due to the size and the nature of the gold field. Okay, COVID. Someone's asked a question about COVID. The only for us is COVID's really had a relatively small effect. The team's out operating in South Africa as we speak. There's about 40, 50 guys on site drilling holes, doing engineering surveys, geophysical surveys in South Africa. Mining is classified as a critical industry. So once you've completed your paperwork and your safety standard, you can sort of get on with your business. The team has done all that. They completed over 900 pages of COVID safety manual during the quiet period last quarter. All our consultants have been able to work from home. We've been really able to progress the project very effectively. So, I was actually quite proud of the guys. They did a really great job on that. And, and the mine site is fully, and the exploration team is fully operational today. Yeah. So just the next question. Yeah. Okay. So someone asked a question about permitting. We really do expect that permitting to be done in the fourth quarter. And when we say that, we've allowed a little bit of time for any sort of unexpected issues. So in South Africa, the timeframes are fairly regulated and the process is regulated. So, you know, you can make a fairly good prediction about when the permitting will come through. So post the DMR decision, there's a 14-day review process with a 20-day appeal. Effectively, once the DMR has granted it, you know, you're pretty much there, and there's a really, yeah, it's pretty close anyway at that point with a legal review post. I think that's nearly it for the questions. So I think I'll cut it off there. I just thank everyone for their questions and being with us today. Theta is a large story, 6 million ounces, all phases, a lot of growth. So I hope you'll join us. We're enjoying being in the US market there on the OTC. And thank you very much.